This is the Asia Climate Finance podcast. The series is dedicated to the discussion and analysis of business and finance trends around the energy transition and decarbonization in Asia, the largest energy consuming region in the world. Welcome to episode 18 of the Asia Climate Finance podcast. We're recording on the 10th of October 2022. I am Joseph Giacobelli, your host. Today's guest is deeply involved in climate finance in Asia in general, and in particular in the Chinese mainland, Hong Kong, and Taiwan. He is Piers Touzel. Piers is the managing partner at for the three jurisdictions I've just mentioned. For those of you not familiar with it is a global consultancy firm focused on sustainability. Also, it was acquired by global investment firm KKR in 2021, by the way. Piers and I have a reasonably all-encompassing conversation about climate finance in the Chinese mainland, Hong Kong, and Taiwan. And the focus is obviously going to be, where we are today in this particular area. Note that the views of our guests are their own and are not attributable to any affiliation, past or present. Also, they do not constitute investment or legal advice. Hello, Piers. Thank you so much for joining the Asia Climate Finance podcast today. And how are you today? Hope you're enjoying the cooler weather here in Hong Kong.
Hi, Joseph. Great to be here. Thanks for having me on the show.
Thanks. Well, we're very, very excited to have you. Piers, we usually start the podcast with our guests' background so that, if it's okay with you, could we start a little bit about your background and also how you became involved in Asia decarbonization and energy transition?
Sure. Okay. So I grew up in suburban Melbourne in Australia. And like most Melburnians, growing up in the suburbs, I decided to study Chinese and organic chemistry at university. So that led me to a career in China. I studied in China for a period of time at university, and then I joined ERM when I finally finished my degrees around 2000. And that was initially in Hong Kong. And then since that, I sort of split my time between various cities across Greater China.
Wow, chemistry, that's kind of, and Chinese sounds like a very interesting mix there. So how did you actually get involved in decarbonization, the energy transition, Piers?
So the firm that I work with, ERM, is a global sustainability ESG consulting firm. And given that climate change is the sustainability challenge of our time, much of what we do these days is in relation to the energy transition. So it was through my work at ERM that I got involved in climate finance.
And how many years ago? Because I know you've been at ERM for almost a quarter of a century, which doesn't make you feel any younger, I'm sure. When do you think that you got kind of like more busy on what we call today climate finance? How many years ago? Was there a progressive acceleration, or you've seen a lot more stuff happening in the past couple of years?
Yeah, thanks for the reminder of the close to quarter of a century there, Joseph. So I think much of the work that we do is driven by commercial lenders. We do a lot of work in relation to project finance. And so there have always been some requirements there around assessing projects' impact on the climate and a climate's potential impact on a project as well, I should add. And that's only accelerated in recent years. So 15 years ago, we're doing a little, there was a little bit of a focus on this topic. Today, it's a very, very strong focus given the need to transition the energy system urgently.
Gotcha. So thanks, Piers. Maybe we can move on to talking about the key subject of today, which is climate finance in the Chinese mainland, Hong Kong, and Taiwan, and especially what these corporates in the region have done in their net zero journey. So, how have the ENS standards related to project finance been evolving over the past 10, 20 years, based on your own kind of views?
Yeah, well, I guess I just touched on that sort of 10 or 15 years ago, there were some requirements in relation to climate change being considered as part of project development. Up until probably 20 years ago, there were very few global standards that were applied to capital projects. They were really the standards of the multinational development banks, groups like the World Bank and Asian Development Bank. And then in 2003, 10 global commercial banks came together and adopted what were called the Equator Principles for project finance. Initially applied to capital projects over $50 million and with quite a narrow focus on just project finance. That was the original Equator Principles in 2003. There have been several iterations since then. We're now into the era of EP4, Equator Principles 4, and over several iterations, the capital threshold has been lowered from $50 million to $10 million US, and the scope of applicability has widened to include different financial products or structures. So they're now, in addition to project finance, the Equator Principles are now applied to acquisition finance, refinancing, bridge loans, that sort of thing, even corporate loans when the use of proceeds is specifically towards a project. So I mentioned the scope of applicability has broadened, so has the coverage. And so in the most recent Equator Principles, which became effective in 2020, the Equator Principles have aligned themselves with some global sustainability frameworks, including the 2015 Paris Agreement, the TCFD recommendations, so the Task Force on Climate-Related Financial Disclosure, and the UN Guiding Principles on Business and Human Rights. So these cross-cutting themes are now considered by global financial institutions as they support capital projects.
Understood. So I guess, listeners will have heard the concept of green finance. And you've seen quite a lot of banks, particularly, I'd say, and I'm not saying this because I'm European, but European banks seemingly have been leaders when it comes to green finance, putting in targets, putting in parameters in terms of what they want to do in their journey towards green finance, and a net zero lending portfolio by 2050 or so. Do you have any views or any thoughts about where we are with Asian banks? Because we hear some of the not to mention, well, I can mention some specific names, but we hear names like HSBC, Standard Chartered, etc. They've got some very, very clear kind of green finance objectives and targets. But what about banks in Taiwan, banks in China, and banks in Hong Kong? Do you have any particular thoughts or views on that?
Yes, certainly in terms of the volume of green finance, the amount of green finance. I think China leads the world. I think if you look at the amount of green bonds that are being issued globally, I think China probably tops the list, actually. My area is more around project financing.
Mm-hmm.
And there's certainly, the Equator Principles are a voluntary framework for managing sustainability challenges. And the idea is that all of the banks adopting the Equator Principles are operating on a level playing field. And there are certainly both Taiwanese and mainland Chinese banks that have signed up to the Equator Principles. So in theory, those banks are all applying the same standards as they look to support capital project development.
When it comes to Chinese banks, because I always feel that there's a little bit of a misunderstanding in terms of the sophistication of Chinese financial institutions in general. But my personal feeling, having observed this for a number of years, is actually they're quite on top of what is green, what isn't green. do you have any kind of thoughts about, project green project finance in China at all for Chinese financial institutions?
Look, for onshore project development, so projects that are supported in China by Chinese banks, they're going to apply Chinese laws, standards, requirements to those local projects. On overseas, as they support their companies develop projects overseas, they obviously need to comply with host country regulation wherever that may be, and there are also a series of a long list actually of guidance documents that have been issued from various government ministries, but they are just that. They are guidance. There's very few hard requirements, and when those hard requirements come out, we know about them. So several years ago, a hard requirement came out that there'll be no more support of coal-fired power outside of China. That was a hard requirement, and when that announcement was made, it happened.
Mm-mm-mm. No, that's great, because I do think we need a little bit of clarification on that front. Now, Piers, specifically in relation to assessing climate change risks per se, what do international commercial banks or development banks require to make a project actually bankable?
So the first thing on this is that banks, whether they be commercial banks or multilateral development banks, have exclusion lists, the things that they won't finance. So this would typically include greenfield coal expansion or coal development projects, coal mining projects. It would also include, for most banks, new coal-fired power stations. Aside from those exclusion lists, projects are required by commercial banks to apply what's called the mitigation hierarchy to try and avoid greenhouse gas emissions, or to minimize those to the extent that they can, and then offset residual emissions. Now, there's some specific sort of triggers under the Equator Principles about what companies need to do, but essentially, for significant emitters of greenhouse gases, so those producing over 100,000 tons per annum of CO2 equivalent, they're required to assess, in line with the TCFD recommendations, both physical risks on the projects, and what are called transitional risks. So physical risks are, we know the risk of increased typhoon frequency or intensity as measured by maximum wind speed, or some of the longer-term climate effects such as changes in rainfall patterns, rising sea temperatures, or rising sea levels. So that's an example of physical climate change risk assessment. And then the other component to it under the TCFD recommendations is an assessment of transitional risk. Transitional risks are those that relate to changes in regulation or policy or customer behavior, for example. And if you followed just to give you an example of that, Joseph, if you followed the ongoing saga with the third runway at Heathrow, that project has been in and out of court because it's been challenged. That groups have challenged that it's not commitment with the UK's commitments that were made under the Paris Agreement.
Got it. Now, I want to talk about ERM. I mean, not that I want to help you do some advertising for ERM, but I'm sure that you guys are very, very busy these days anyway, and don't necessarily need me to do advertising for your company. But ERM as a company has been involved in this since 1971, so it's been around for a while. And can you tell me a little bit of some examples? Obviously, no names to be mentioned, of course, but some examples on how ERM assists companies with their net zero plans?
Yeah, sure. So I think this really depends where a company is in their net zero journey. So at one end of the spectrum, you've got companies that have already made a commitment to meet net zero. and are well on the way to implementing their plans to do so. And for these sorts of companies, we might be, helping them with disclosure around what they're actually doing to their investors or through the stock exchanges. So an example of that would be the TCFD. Disclosure to exchanges or to investors aligned with the TCFD recommendations. At the other end of the spectrum, we've got companies that have not yet started on their net zero journey. They haven't, they may not even have a baseline understanding of what their greenhouse gas emissions are, or haven't considered really what a realistic time frame to commit to net zero is. And so at that end of the spectrum, we're really helping frame the risks and opportunities for the board of the company potentially, and assessing kind of what are the high-level options for that company, to change technology around their production processes, look at market opportunities for purchasing renewable energy or potentially purchasing offsets. And then for everyone, and then in between those two ends of the spectrum, there's a long list of other services that we provide. An example in relation to a capital project being developed is we will undertake a physical risk assessment of the project site as it's being developed, or hopefully during the feasibility study before construction has started, and assess the risks to that capital project from a changing climate. And so as an example of that, one of our clients in Guangdong province actually changed the site formation. They lifted up the site formation in a coastal location about 1.5 meters at the cost of tens of millions of dollars in order to future-proof the asset from rising sea levels. Sea levels are rising in the Pearl River Delta at about 1 centimetre every 3 years. So there's a very real risk. For an operational facility, that's for a project. For operational facilities, we have some proprietary software that companies can use to essentially diagnose whether their facility is operating at maximum efficiency. So it goes right down to the individual pumps and compressors and valves and things, and looks at opportunities for energy efficiency and therefore greenhouse gas emission reductions.
Just based on your experience, I'm kind of fascinated about, and I think you and I had some months ago a conversation about this. With regards to, how corporates handle their net zero strategies, and specifically, I've dealt with companies that basically do it because they've kind of been told to do it, but they just think that it's extra work that they don't take very seriously. And then you've got another set of companies where, absolutely razor focused on making changes, and then you've got everything in between. Now, for those companies who kind of know that they've got to do something and they're putting things in motion, how do you address the senior management and the board of directors? I mean, is there like some kind of education process, or how do you go about it? And what I mean by that is, if the board or the senior management is not 120% on board with this, then nothing is going to really happen at the operational level.
Yeah. It's a good question. I think in many parts of the world, regulation is now playing a part. Okay, so in Hong Kong, for listed companies, we now have TCFD disclosure, which requires board-level oversight of climate risks and disclosure. Within the EU, there's a proposal for a piece of legislation that's actually going to the European Parliament later this year, or perhaps early next year now, it might have been delayed, around corporate sustainability due diligence, which again puts the responsibility for climate change due diligence within a company's value chain on the board. So I think those sort of that emerging regulation has really helped. 15 years ago, no one at the board level wanted to hear about sustainability challenges. I think that's a very different story today, Joseph.
Well, especially when you put in the three words or two words, climate risk, which is real. As we've seen this year or over the past few years, especially. And Piers, is there a standard approach or a standard methodology that companies can use on their journey to net zero?
Yeah, look, I think it does differ slightly by industry, but in general terms, the steps are quite similar across different industrial sectors. And it really starts with measuring your footprint. You can't do anything until you understand what your scope 1, 2, and 3 emissions are. And that's got to be the first step for all companies. I think on previous podcasts, you've covered scope 1, 2, and 3 emissions. Scope 1 from direct emissions from your own facilities, scope 2 being imported power principally, and scope 3 being the emissions in your value chain. Embodied carbon in your supply chain is an example of that. So, you have to have a clear understanding of where your climate exposure is before you can start putting in place plans to manage that risk. The next, after you've got an understanding of the baseline, the next step is to establish a net zero goal with some interim targets. Okay, and there are different frameworks for how you do this and different methodologies. Greenhouse gas accounting protocol is one of those. The SBTs, the Science Based Target Initiative, is probably one of the better recognised methodologies. And in order to make a claim of net zero under the science-based targets, companies need to submit a commitment letter to the Science-Based Target Initiative, outlining what the commitment is, the time frame for that commitment, and then it's essentially validated in order for you to be able to make that commitment. So after you've made that commitment, it's really about it's where the rubber hits the road, right? It's really about reducing emissions. And the first step in doing that, I think, is around energy use and looking for options for energy efficiency. I think that's probably a step that's often overlooked. And if we think about Hong Kong and the amount of energy that's consumed by the real estate sector, clearly energy efficiency is a huge issue for Hong Kong. After we've done what we can to reduce, following the mitigation hierarchy, we should be looking at alternative options to switch to lower carbon or hopefully zero carbon energy. Again, not always possible. In Hong Kong, we don't really have the luxury of choosing between our power, our sources of energy. But switching to zero carbon power is going to be at the heart of energy transition. And then finally, after we've done everything we can on sort of avoidance and minimization and looking at alternatives, it's then around offsetting to offset whatever the residual emissions are. So for most companies, getting to net zero is going to require taking advantage of carbon removal technologies or offsets.
And when it comes to, I think in the last 2 or 3 podcasts, the carbon markets concept has come through again and again, because it is something that is being aggressively discussed in many Asian jurisdictions as we speak today. In terms of the kind of carbon markets or carbon offsets in the kind of 3 Chinese jurisdictions that you're looking at, do you have any thoughts on that? I mean, are we making some good progress? Where's are we on the right path?
Okay, well, they're very different markets. They essentially operate as 3 separate markets, right? And I don't know if we're on the right path. And you've had experts on your show previously, Joseph, who know a lot more about carbon markets than I do. If I take a step back and kind of look at the commitments that have been made by China, the nationally determined contributions that have been made by China, and how Hong Kong fits into that, I just can't see how Hong Kong gets to carbon neutral without a functioning carbon market, because 75% of the power today is generated by fossil fuels, about 25% from imported nuclear. That's the transition is happening from coal to natural gas, and it's definitely less carbon intensive than coal, but it doesn't get us to net zero. So I think Hong Kong does need to have a functioning carbon market or import a lot more zero carbon power from China.
Mm-hmm. And how about Taiwan and China? How do you see the progress in those two places?
So China, as you know, this year launched the carbon emission trading scheme, starting with the thermal power sector, and been very clear that that will be broadened to cover different industrial sectors in the future.
Great, that's great insights. I mean, my own two pennies worth is that you need a very consistent and transparent long-term government policy like China has adopted or like Singapore has adopted in order for this to develop in the right path. But it seems that Hong Kong, for a whole variety of reasons, in my personal opinion, has been lagging behind, and definitely it can do a lot more. But again, that's just my own personal opinion.
And Joseph, I think on that, China has been experimenting with pilot, provincial level and municipal level schemes for over a decade now. So they've learned from the experience they've had for more than 10 years.
No, that's a really good point, and there's been an enormous amount of communication amongst the kind of people in charge in China with their counterparts in Europe, for example. Lots of communication there, and so China's got the advantage of learning from all the mistakes that the European emissions trading system has had. Now, moving back to what international commercial banks are doing. Now, you work with a lot of financial institutions. Can you bring some rough examples on what's happening with these financial institutions? Their thinking and how they are developing this.
Sure. The finance sector clearly has a critical role to play in the energy transition, because just the sums of capital, sums of money that are needed to finance a transition are enormous. And financial institutions are not just looking at this as a risk, but as an opportunity as well. So we're currently working with several financial institutions to help them narrow down on business opportunities for financing the energy transition. So taking a sort of a look at different industrial sectors, different locations, and sort of overlaying that with the risk appetite of the financial institution to really narrow down on where they can direct their marketing effort to develop new business in the energy transition. Would be one example of how we're supporting the finance sector.
And one, I guess, silly question amongst all my silly questions is, what about the human resources on the human resources front from these financial institutions? Do you find that currently, as we speak today, there is a little bit of a lack of manpower when it comes to kind of sustainability, climate risk expertise, or you think that these financial institutions in the three jurisdictions we're talking about are okay for now?
Everywhere. I think everywhere has got a lack of talent, Joseph. It's not just in the financial institutions. In fact, I think in ERM's own TCFD disclosure, we have listed as one of the risks to our business being able to attract the right talent to service our clients in relation to the energy transition. So it's an issue across different industrial sectors, different parts of the economy for sure. I think the financial sector is waking up because they see the opportunity that this presents to them.
Got it. That's really great, Piers. To wrap up, may I please ask you for some, final thoughts or final takeaways?
I guess I have to start with climate change and the risks that I see, Joseph. We're not on track to meet the commitments that were made under the Paris Agreement. We're nowhere near on track to limit global warming to well under 2 degrees. I think as of this month, we're already at about 1.2 degrees of warming since pre-industrial levels. And the changes are now locked in for decades, if not centuries to come, because of the length of time the carbon cycle takes to operate. I don't think that's really as well understood as it should be. And so I think to address climate change, it requires a whole of society response to it. It's going to require enormous change, from the financing to technical solutions to changing to everyone changing their behaviour. It genuinely is systems level change that needs to happen. It goes well beyond just just transitioning the power sector, for example. So, perhaps leaving you with not the most optimistic thought, but I genuinely worry about the lack of awareness still today about the climate change that is already locked in for decades, or if not centuries, to come.
Yeah, I unfortunately would tend to agree with that view. Yes. Well, listen. Thank you very, very, very much for your time. I really, really appreciate your insights, and definitely looking forward to having more conversations going forward. Given the amazing amount of expertise that you have.
Thanks very much for having me on the show.
Thank you. I hope you did enjoy this episode of the Asia Climate Finance podcast. I would really appreciate any feedback, topic ideas, etc. My contact is in the show notes. Thank you.